breaking the language barrier. Equities, volatility, liquidity, bear market. The world of investing often feels like it was designed to keep you out with complicated words. But the truth is, if you want your financial blueprint to work, you have to master this language. Today, we're stripping away the jargon. We are defining the pillars that will help you understand every money conversation in 2026. Let's decode the map to your wealth. Assets versus liabilities. This is the foundation of everything. Asset: anything that puts money in your pocket. Think of stocks that pay dividends, a rental property, or a business. Liability: anything that takes money out of your pocket. This is your car loan, your credit card debt, or that subscription you never use. Investing is simply the act of collecting assets so they can eventually pay for your liabilities. Risk versus reward. This is the law of gravity in finance. There is no such thing as a guaranteed 20% return. High risk: potential for huge gains, but a chance of losing it all, like early-stage AI startups or crypto. Low risk: steady, smaller gains where your money is safe, like government bonds or CDs. In 2026, with interest rates at 3.5%, safe money finally pays. But to beat inflation, you'll need to understand how to balance this scale. Volatility versus risk of loss. New investors often confuse these two. Volatility: this is just the noise. The price goes up and down every day. It's like seasickness on a boat. It's uncomfortable, but the boat isn't sinking. Risk of loss: this is when the boat actually sinks, a company goes bankrupt. For a long-term investor, volatility is your friend because it lets you buy assets on sale. Real risk is what we avoid by being smart. Bull versus bear markets. Why the animals? Bull market: a bull attacks by thrusting its horns up. This represents a market that is rising with optimism. Bear market: a bear attacks by swiping its claws down. This is a market falling in fear. Knowing which season we are in helps you stay calm when everyone else is panicking. You've just taken the first step toward financial literacy. You now understand the language of the pros. Check out Part 2, where we dive into dividends, market cap, and the hidden cost of doing nothing. See you there. Thank you for watching. Final legal disclaimer: this content is not personalized investment advice. All investments carry risk, and you may lose money.